When I look at the Australian economy, though, I see a much weaker link to Chinese growth cycle than we did 10 or 15 years ago. Our mining sector here in Australia isn't undertaking the big investment push that drove the economy, that was really defining the economy 10 or 15 years ago. So, look, that is a positive. We will see that probably or possibly manifesting in a little bit of strength in iron ore prices, the currency perhaps as well. I don't think it changes my view on the labour market, on household spending here in Australia, on business investment overall. Those things at the moment are very much being driven by domestic monetary policy, by the RBA's very tight. Household cash flows are under a lot of pressure here. We have variable rate mortgages, so every interest rate change goes directly through to new borrowers, but also to existing borrowers. That's having a much bigger impact on China. I think you might see a bit of a boost on iron ore prices maybe and AUD, and that'll help a little bit. But overall, much more focus on central bank policy, and that's going to determine our growth. It's going to be much more important for our growth over the next 12 months than China's stimulus, I think.
And we'll be watching data. Of course, the RBA has been watching out for the sticky inflation, and you'll get a reading on the CPI indicator come tomorrow. What are you looking out for?
Yeah, look, that's going to be some good news. Now, obviously, it comes the day after the board meeting. The RBA won't have that at their board deliberations today. But it looks like headline inflation will come back into target for the first time since 2022. So that will be good news. Mark is looking for a 2.7% year-ended. I'm a little bit higher than that at 2.8% in my spreadsheet. That's all well and good. Headline inflation, though, there's two big things that are driving that. Petrol prices are down about 10% in year-ended terms, so that's going to help tomorrow's number. Also, though, electricity, retail electricity subsidies, so electricity bill relief for households introduced by the federal government on the 1st of July, that's going to impact the measured price of electricity, feeding straight through to the CPI measure. Unfortunately, the central bank won't change policy on any of that. Those subsidies for electricity prices are only in for 12 months. When they come out, electricity prices are going to jump back up again. So we know it's temporary. It will look good on the screen. Unfortunately, much more focus on the trim mean, on Australia's core measure inflation and where that lands for the quarter. We won't get that data until the end of October. That will shape a very important discussion ahead of the RBA at its November meeting. So good news tomorrow, perhaps. But really, the devil will be in the details. We need to look through those service prices, the things that are driving core inflation, and we'll get a clearer picture of that in not until late October.